Hi and welcome to the market alert for Wednesday the 19th of August 2020. So yesterday gold price jumped, the dollar dumped, and the S&P ends the shortest bear market in history. As we've seen before, nothing to see here, move along. And that is precisely been the case for the last 12 years, since 2008, keeping the market on the highs, but starting to unravel. And as I said yesterday, we're in the calm before the storm. Once we get to September, October, and particularly November for the US election, the volatility is going to be absolutely fantastic for intraday traders. So let's move on and have a look at yesterday, where the volatility was fairly low. It started off well. As you can see here, this is the opening part of the session. We have some selling. And of course, we're down in that area, which we always pay attention to, the low. So the selling started at the S1, and then prices, you'll see, as the shorts. What I was doing here was just having a look at the daily chart, just getting my bearings, see where we were if we took out the low, where we would be looking for the next downside target. And then switching back, and now I can see them buying back in. Prices have come off the low, green bar, and again you'll see a second green bar. So the shorts in this move to the downside, taking profits, taking out stops, and bringing the market back there. So prices then rally back. They close above the 20 bar moving average and the S1, but they don't hold for long. Prices reverse and come back to the big round number, the BRN, and the low. So we ended up with a sell signal, and we know we've got to drive through this in order to move lower. We certainly have to take out the low. In a bull market, the low doesn't like to be taken out from the previous day. That's what keeps the uptrend intact. So we have some attempt here to buy the market back, but I stayed with the trade as the S1 was here and the 20 bar moving average. Maybe they needed to shake out a bit more to the downside before they could bring the market back, and that's precisely what happened, as we see prices move lower, and then all of a sudden you'll see them buying back. Now watch the volume in this bar. You can see already it's greater than the previous bar, and prices are not moving lower, so we can see that the pros are buying back. And then you'll see prices close back above the 5 bar moving average, which ended the trade to the downside, which from a nearly 40 point move to the downside and potential profit ended up with just 9-10 points there, because of waiting for the market, when really should have got out here as the volume built there. There's a pretty good chance that we're going to bring the market back in again because of that low there. They want the market above the low. The low is the most important pivot point in the chart, in my opinion. The DP is powerful in the sense that it alerts you to whether, if the market's going to be short, along with the 200 moving average. But the low, if taken out convincingly, is going to give you a down day in the daily chart and allows you to stay on the downside with the market. So if it comes back, the opposite is true. So prices come back above the low there, and you can see the volume spiked up a bit. Unfortunately, we don't get a signal because the range of the bar is outside of the 1424, only by a couple of points. But what we have here is the market back above the low. That's the key here, and also the psychological level there of 12,850, the BRN. Prices then drive through the S1. We've got the resistance to the left, we've got the 200 MA and the BRN at the top there as well. So prices trade sideways. And interestingly enough, they come back. You can see prices have closed back below the 5 bar moving average, but not below the 20. And then prices bounce off the BRN there, the big round number. There's a bit of selling here as prices approach here, but then they break through, and the rest is results in an up move. So now we get to the 200 MA. We see some potential weakness there, and then prices trade up to it, hit it. Again, you've got that increase in volume, and you'll see this all the time at these areas, whether the pivot points, averages, BRNs, and then you'll see prices again being moved off the BRN, and eventually they break it, they trade up to the DP. Prices have to drive all the way through to get to the previous day's close, and then we see prices trading sideways, and once again holding at the 5-bar moving average, even though there's some potential weakness here where prices have come back off the highs and then up to the next BRN, and then prices again consolidate before moving up to the previous day's high. Now watch the volume in this bar as we approach the previous day's high. We've just spoken about the low, and there you'll see a massive volume at the previous day's high. And again, it's as important as it is the low, because you're trading outside of the range of the previous day's trading range, which is really important, because if you can hold at the lows and then bring the market up, you're going to end up having this up and down motion in a bull market as prices make new highs. And when you approach the previous day's high, if you've come down first, as we did here, where prices have moved lower down to that low, once it can find support there, then it's free to move back and bring the price bar back, which you'll see shortly when we look at the daily chart. So that concluded the morning session, as prices then saw a bit of profit taking as it moved back. The market became really quiet and the range was small in the price bars too. So in the afternoon session, before the market opened, we can see that we've already got selling at the resistance 1 pivot point. You see the selling there. It then became a resistance area as prices failed to close back above it. Prices below the 5-bar moving average, with prices following moving lower. We then see a bit of support come in at the 200-bar moving average with the green bar there, so there was some profit taking. And eventually, this is also at the previous day's high, as important as the previous day's low. And then the market struggled at this area, and prices moved immediately lower from the previous day's high. So we can see the selling coming into the market, with prices moving straight down to the close, and then selling coming in. A bit of a bounce there. Prices closing back above the 5-bar moving average, heading towards the BRN in this area here. And then as soon as prices close back below the 5-bar moving average, you'll see prices then move down towards the DP level. Bit of support is found here as prices come off the low in this price bar. Look at the volume. You'll see there is some buying inside of this selling bar because of where the market closed, which is just here. And then once again, prices trade sideways, finding support initially at the DP level, and you can see the consistent volume here as there is an attempt to do this. The market's closed above the 5-bar moving average, but yet again prices fail to hold, and a close back below the 5-bar moving average sees prices move lower again. You've got the selling, which is what you want to see, breaking these the BRNs and then moving down to the S1. Now you've got some profit taking here as the market puts in a green bar. The brakes are being put on at this point. However, just to make sure that this selling that we start to see here is going to continue, then the best thing to do is to have another shakeout. So prices come back, and you will see prices close back below the 5-bar moving average, and then prices moving lower. And look where we came back to the previous day's low there. So once again, having traded up to the previous day's high and down to the low, we know that the market in the daily chart is trading in a sideways range. So now back at the actual low, you can see the buying coming back in, because it's an important integral part. And this is a very interesting price bar because it's come straight back off It's gone down, had a look, and then come back, and the volume is higher. Closes back above the 5-bar moving average, and now you will see prices consolidate at that low point. And the answer is yes, you can buy at this area and place a stop under here. You don't need a signal. You can trade off these lines using the observations that I'm actually showing you here. But what I'm trying to do is to actually develop the algorithm to highlight these automatically with signals. So prices start to move off here, we get a bit of a bounce, and then we get a potential sell signal. Now, not the ideal place because of what we've discussed here, where we've got the previous day's low, and this actually ties in with the first profit target or scalp area as well. So I was watching this to see if we were going to get another break to the downside, and immediately I can see that we're buying back in already because the volume is greater than the previous bar. So I have to make a decision, and on this occasion decided to just pull the trade because it wasn't going anywhere, and you'll see that with the statement there. And then we had a potential buy signal just as the market closed as well, just at the 4 p.m. or just before 4 p.m. And I thought, well, I'll take this trade because we're coming off the low. But unfortunately, it didn't pan out. We started to, but we've got resistance to the left. We'd already had the major move in the market for the day, but no follow through back to the upside as the market struggled. Too soon to move the stop to break even. And again, you'll see prices coming back. When they come off the high in this sort of bar, you know that there's some selling around. And then prices reversed, came back down to the S1 through the 20-bar moving average. We saw the selling there. I could have offloaded at this point, but I thought I'll give it a chance just to see if it would come back, but it didn't. So I had to take that one on the chin. Should have just left when we had the signal, but it could have worked out the other way and continued to the upside. So hey-ho, it's move on to the next trade. It's as simple as that. That's how trading is. It's probabilities, and in this case it just didn't work out, and that as I say is part and parcel of trading. So let's have a look at the daily chart, and you can see yesterday's range. We're still stuck in this sort of sideways range at the moment. Looks like we're still back at the 62% retracement area. Like I say, we've got this defined sideways range as the Dow has as well. But the good news is when these break, the volatility is just divine to trade because the market goes in one direction as well. So where you get the trades like yesterday at 4 o'clock where you're giving up a few points, you soon pick them back up when the market turns around. Let's have a look at the 2-minute chart on the overnight. We can see that we're hugging the 200 MA. We break away up to the DP, and this is also at yesterday's close. You can see how again prices came back, found support here. You got that cluster of volume here as prices trade at the 200 MA. Again here as well, you can see there's a bit of a cluster down here. And also as we head back towards the DP, there's a bit of selling there. Well, it's actually at the BRN, not the DP, so a bit of resistance there. And again, now you can see, again, we've got a bit of a cluster here as we're approaching the 200 MA. Quick look at a few other markets. Let's have a look at the Dow. I'm still working on the signals in the Dow, and they're working out quite nicely. That was the first part of yesterday's session. Again, you've got the DP there. The market attempted to move higher, ran into the DP, and then sold off for 100 points to the downside, and then worked its way back to another 100 points there as well. And let's just look back over a couple of days. No signals in the evening with the current settings, but again you can see there at the previous day's high, again you can see how important these levels are, and eventually once the market breaks the 200 MA, once again prices trade down to the DP level. So these signals are coming on quite well. There's some nice trades in the Dow, even though it's in a sideways move. Again, nothing in the evening session there as far as automatic signals. And again, you can see after breaking out of the sideways move, prices needed to get back above the 200 MA and again the previous day's low. And that's where we see prices moving higher. In the daily chart for the Dow, again, you can see prices are sideways. But once they break, like I say, the volatility will be very, very nice to trade. Let's have a look at a few other things. The implied volatility is now making new lows, taking out the low that we saw recently of 1922. The lower this goes, the bigger the up move, down move, or whichever direction the market takes when it breaks will be great. In fact, what usually happens if you get very lows in volatility, it moves to the downside. And I do prefer the short side on trades because obviously we have the situation in any market where you have the staircase up, the elevator down. So yeah, green at the moment in the visuals, no indications yet of that picking up, but like I say, the lower it goes, the better the move in the underlying market. So today we've got a bit of news out. We've got an OPEC meeting, we've got crude oil inventories, and then at 7 p.m. we've got the FOMC meeting minutes, which has been downgraded to a medium impact news, which is bizarre. And there's nothing there for this. It's obviously just the last months that they're releasing. A quick look at the precious metals markets. We can see that silver continues to move to the upside. The positions are all still very profitable at this point as the market continues to move higher, and no doubt will be the case going forward as things start to weaken and we head back towards the all-time highs in this market. Also, yesterday we looked at the dollar index, and this broke the 92.51 level. I went straight through this. Not as much selling as I thought there would have been, so we may get a bit of a bounce there. And in the monthly chart, you can see we have a long way to go as far as the devaluation is back down to the 2009 low. So a lot of potential here. You look to try and short this and actually hold the position as well. From the daily chart, any sort of rally up to the 20 bar moving average, and see if I can hold it. As you can see here, there's a defined trend, and that way use the monthly chart to hold the position down to the 87 area, which would be a nice trade. Okay, that will do it for today's market alert. As ever, thanks for watching. See you in the next one.